All right, guys, welcome back for our weekly Foundation Capital live stream. Joined here by myself, PV, CPACA, and then we got the other trustee, Mitt, as well. Uh,
Everyone,
it's been an interesting week to say the least, Mitt. We've seen oil prices spike from $64 all the way to 120, and then back down to 89, still up overall in just under 2 weeks. It's causing a lot of turmoil in the markets, of course, as you've seen volatility in the stock market, people just panicking from the amount of volatility happening. And headlines are really controlling some of the headwinds here. You know, the G7 stepped in at one point saying that they were standing ready with oil reserves to release. Didn't end up ultimately doing that. It's a resolution, but they're currently staying paused. And, the big thing driving some of this turbulence is that the Strait of Hormuz has stayed effectively closed and is causing a disruption in 20% of the global oil trade. And it's times like this that remind us that it's good to be in assets like real estate and other types of assets where the headlines don't necessarily cause volatility. You know, for us in real estate here, especially the type that we're in, multifamily real estate, ultimately it's the supply and demand which drives the value for these properties. And currently, there's a lot more demand than there is supply, especially in our demographic, which is the core workforce housing, the people that are making 50 to 75K a year in income. Because there's not enough supply for them, that demand still stays steady, and it's not enough to have a headline like this affect those core fundamentals. Well, what's your thoughts here?
no, I think you hit the nail on the head. The reality is, for as much as everyone has been saying, like, oh, what's going on in Canada? Why would we invest there, etc. Look, guess what? We're not Abu Dhabi. We're not Dubai. We haven't been hit by a rocket or a missile. Sure, the taxes are higher and everything, but you've got that safety and security. Obviously, I hope everyone is okay. War is a terrible thing, but we're living in a really crazy time period in which this uncertainty exists, right? And like Canada historically has always been a safe haven where people can have a flight to safety. You're going to be safe in Canada. You can walk the streets. You're not worried about any danger. No one's going to pull a gun on your kid in school, relatively. Maybe there's like a one off incident, right? But there isn't like as often as you have a school shooter going down in America. So Canada's flight to safety is its major selling point, and for some reason it felt like the whole world forgot why people wanted to come to Canada. But that's exactly why all the immigrants want to come to Canada. And I know the government has been, pausing a little bit of that. We've seen that decrease. We've seen the impact in the rental markets. But they actually started slowly turning on back some of these immigration programs. So we're seeing Immigration Canada processing more applications, and we're going to probably see that in the background. They're not going to put a highlight of, oh, yeah, we're letting all these people in, but it's going to slowly come back. So, yeah, with the volatility in the market, it's definitely been a safe place. I mean, with the investor conversations I've had with people, that's actually always why they are putting a lot more of their portfolio into real estate. It's funny. Sometimes people will argue it's not as liquid as, let's call it, the stock market, but that's exactly the point. You don't have to go through the pits and falls of looking at your portfolio and seeing it drop in one day. That's not necessarily happening with our asset class, which is that core workforce housing. So, a lot of worried sentiment in the market from people. Obviously, I just got back from Sri Lanka. I had my dad's funeral, and I got back, and a couple hours later, they fired the rocket at rockets into Iran. Right, so I was thankful that I escaped or wasn't there. But I know a bunch of other people who were supposed to fly back now delayed trips. So I think it's times like this that remind people like, hey, this is why in the safe and secure times, Canada is the place to be. And I think as a result, it's going to be a global leader going forward, which is why our sentiment and thesis is on providing that workforce housing in Southwestern Ontario continues to be a focal point for us.
Hmm. I think what's interesting is even before these headlines came into place or this global conflict started, developers were already pulling back as construction costs had gone up and interest rate environment. So we're very much in a housing supply shortage, and developers are not putting shovels in the ground to contribute to future supply that's scheduled to be coming online in 3 to 5 years. So that is already causing an issue. You know, the CMHC reports, I think, said we need to build like 250,000 units a year in order to make up that gap per year. That number already got cut down because of the current environment. And then now with this tariff uncertainty and wars, I think it just further delays developers building end user products like condos, like regular homes for end users to buy and live in. It just further delays the development of those types of projects. And it's going to cause a real supply and demand shock in the future. Like you said, immigration is slowly being turned back on, and that existing core workforce doesn't have enough housing as well. So as that supply is doesn't show up years from now and the demand continues to grow, we're in for quite a shock. And that's why existing purpose-built rentals like the ones that we own in Foundation Capital Private Real Estate Trust are going to continue to stay in demand and increase in value. So it's a good asset class to be in. Again, just inherently, multifamily real estate is known as one of the most recession resistant asset classes, performs well in times of recession as well as in times of prosper. So always good to have a portion of your portfolio invested in this type of real estate to not only preserve your capital, but also grow it in the good times as well. The good news for the FCP investors is despite these headlines and these scary things, the properties are continuing to collect their rent. Nothing has changed fundamentally in how we operate. Rent revenues coming in, expenses are being paid out, and investors are getting their monthly distributions on a monthly basis. For our projects that we're working on, where we're improving net operating income through getting turnovers, or also through the redensification strategy that we've been chatting and implementing more and more on, and showing investors how it's being done, further improving the net operating income and creating value for our investors.
Yeah, can you imagine your net operating income gets impacted by a rocket repair RM charge?
Yeah, exactly.
I think it was a Dubai Fairmount who got hit, right?
Yeah.
Something?
Imagine just even insurance and underwriting on loans. Like, you know, people are happy to lend on real estate because the numbers work so well. This thing is going to collect rent and be able to make its mortgage payment no problem, which is why it's considered a safe type of asset lend. But you add rockets and things that can destroy the asset to the mix, that really changes the underwriting quite a bit.
Yeah, it's one of those things that actually is really sad. Like, it's more of a societal thing, but it's like it's so easy to destroy, but it takes so long to build, right? So,
Mm.
I think a point that you were mentioning earlier that's very important is like a lot of the developers weren't just only in condos, and just it's not just their fault for picking only condos. The land entitlement and development process takes a lot of time in the cities that they operate in, right? So when you're in a city like Toronto, just going through the stage before you can get shovels in the ground takes you 5 years. And if you're doing it not for existing rental and you don't have a multifamily building sitting on it, and it's a piece of land or it's a single family house, you're likely underwater paying interest anywhere between 8 to 9% because it's more of a land loan based on what the person sold it to you for. So hold all those 5 years of holding adds to your holding costs and returns you must generate for your investors if you're one of those developers. So by the end of it, it's not necessarily that the construction, actual hard cost of construction has gone up so much. It's that you have to actually make all that return back and pay the investor X dollars. And when I say investor, I'm not talking mom and pop individuals buying the property. I'm talking the pension plans who are giving out these $100 million land loans and all of that are putting into these projects. They want their 8 to 12+% return, and their waterfall has it that they're getting paid first and everything when there's a final sale. So then the developer and builder is really getting squeezed on it, which ties back to, again, what you were talking about is like why we like existing multifamily, because we can buy it and we can turn over and push the NOI up without having any of that lag of cash flow uncertainty of whether we are going to get approved, and the timeline delays that you see in Toronto, GTA, and some of the larger markets. And that really ties back into our development side of things. Our Wellington development project is a really key highlight on the fact that the city is being very pro-development and wants transit-oriented development on the bus rapid transit. They have already gone ahead and rezoned the area to be 25 stories. That in itself, in like a Toronto GTA area, would be a 2 to 3 year process that we're able to now skip. And we've seen that there's been minor zoning bylaw amendment approvals in like less than 6 months, and site plan approval shortly after that. So we're actually pretty excited for Wellington Development Fund. That is closing this March 15th for its first tranche. If you're seeing this today and you want to get in, you might not be able to get in for the tranche 1, but you can sign your subscription to be committed for tranche 2. That'll happen later in 2028. So definitely check that out. I think those are definitely the things that we're looking at. And I think that's what's giving confidence to investors as well, is that we've kind of assessed the market and we've seen like, okay, these markets are great. They're sexy and they're in high demand because, it's a major city like Toronto. But when you're looking at 4 times the wait time to like get things to happen, and your rents aren't 4xing, to compensate or, managing that, it doesn't make sense. So pretty excited for what we have on the board for both our existing rehab and intensification and for the development piece that we're doing. I don't know.
I wanted to add there, Mitt, is what makes the Wellington Tower Development Fund project viable even in this climate is the fact that we have the government incentives in place as the government's pushing for the building of purpose-built apartment buildings, but also CMHC financing. The CMHC, which is the Canadian Mortgage and Housing Corporation, is a government-backed entity that has a mandate to lend on deals in order to put housing supply into the market. So the government very much is making some efforts to contribute to this housing crisis. There's a debate about if they're doing enough or not, but this is one of the ways where they are trying to have a direct impact by offering developers like us attractive financing terms that make these types of projects viable for completion. And the interest rates are much better, the loan to value is much better. So it allows projects like Wellington Tower to be viable even in this current development climate, and we're excited. And the other big key thing to note is that our exit for our investors is fixed. We have Foundation Capital Private Real Estate Trust lined up as a buyer to purchase the end product, or we'll sell it on the open market to an institution which would love to hold an asset like this as a purpose-built rental in their portfolio. Typically for our developers who are making condos and building regular homes, they're not putting shovels in the ground because the end users, who are regular people, don't want to buy condos right now. They don't want to buy end homes. The real estate market is very much suffering from a regular end user perspective. However, people still need a place to live. So purpose-built apartment rentals, like what we're building with Wellington Tower, are performing well and are very much needed in the marketplace. So this is your opportunity to profit and invest like a developer and get a developer return versus chasing a condo as an end user, having to deal with the tenant and bet on speculation.
And a great point that you mentioned, PV, is like when you're doing condo development specifically, part of how they get financing from a lender is they show pre-sales. And right now, in the existing condos aren't even moving, getting pre-sales is very difficult. And so you're sitting on land that isn't, it's probably 50% loan to value, and you're having to pay 8 to 9% plus interest on it. So again, it goes back to what I was saying earlier. It's very hard to make viable. And our project specifically are CMHC finance focused. So we're getting that 4% interest rate. And that's really allowing us to generate the returns that we are for our investors.
Amazing. Yeah, awesome, Mitt. I think that's it for today. Before we sign off, again, guys, if you are interested in making an investment with Foundation Capital Private Real Estate Trust, be sure to reply to this email at Investor Relations or book a call using our Calendly link. Again, for our development fund, we still have some spots left, and the March 15th closing is coming up very soon. So make sure you reach out, book a call, and get your subscription agreement signed. Anything you want to add before we sign off, Mitt?
Stay safe, guys, and hug your loved ones.
Perfect. Take care, guys. See you
You
next
guys.
week.